This is the Last Transmission Podcast. Revelation chapter 17, verses 12 through 13 speaks of 10 kings who will rise together and give their power to the beast. But they won't wear crowns or wave national flags. Today, we're watching the quiet formation of a digital empire. From the G20's coordinated agendas to the rise of ISO 20022 and synchronized crypto regulations, the world is aligning under one financial voice. Are we witnessing the foundations of the 10 kings?
What if the future of money, power, even our most personal interactions is being quietly reshaped right now? Far from the headlines, by institutions and technologies most of us have never even heard of. This is the Last Transmission Podcast. Here on the Deep Dive, we're taking on a truly expansive topic, the evolving architecture of global finance and the surprising implications of its really rapid digital transformation.
Indeed. We've been given access to some fascinating insights from entities like the Bank for International Settlements, the Central Bank for Central Banks, essentially, along with detailed analysis on digital currencies and even declarations from the G20. Our mission today is really to pull out the essential threads from this, let's face it, complex tapestry. We want to help you understand how these developments might touch your life, your privacy, and maybe even the concept of national sovereignty itself. I'm expert speaker.
And I'm host speaker. Let's unpack this. Okay, let's start with an organization that maybe flies under the radar a bit, but sounds crucial. The Bank for International Settlements, or BIS, you called it the Central Bank for Central Banks. For those unfamiliar, what exactly is its fundamental role in this whole global picture?
Well, the BIS plays a really unique and kind of multifaceted role. At its core, it's there to foster international cooperation among its members. That's 63 central banks, monetary authorities, international organizations. But they don't just, provide banking services like a normal bank. They offer crucial, in-depth analysis. And importantly, they serve as a vital global forum for dialogue. They convene these high-level meetings where central bank governors get together and, frankly, shape global financial policy. So it's a hub for both practical financial stuff and strategic discussions.
Okay, so it's a meeting place, a service provider, and a think tank, all rolled into one. And it sounds like they're not just sitting back, are they? Our sources mentioned this Innovation BIS 2025 strategy. They launched it back in 2019, and apparently they more than delivered on it, within budget, on time. That sounds like a pretty significant, proactive push to be, agile and forward-thinking in this digital age.
Absolutely. That's what's really fascinating here. The BIS isn't content to just be, a traditional, maybe slightly staid institution. It's actively positioning itself as a key architect of the future financial landscape. Their annual report for 2024-25, for instance, it indicated an exceptionally strong year. They saw record net profits of SDR 843.7 million.
SDR, can you just clarify that quickly?
Right, sorry. SDR stands for special drawing rights. It's not a physical currency you can hold, but it's an international reserve asset, kind of a unit of account used by the IMF.
Got it. So big profits.
Huge. And total comprehensive income of SDR 3.4 billion. This financial strength, it's driven by robust demand for their central banking products. It's quite remarkable, actually. Their equity even increased by over 40% in just 5 years, from 2019-20 to 2024-25. This expanded global footprint, their investment in deep research and data, it's all designed to make them more responsive, put them right at the forefront of financial innovation.
So they're not just a passive observer or, a simple regulator. They're an active, financially powerful architect of this digital future. It does make you wonder, what are the deeper implications when an institution like this, so foundational yet so forward-looking, gets this strong and influential?
Well, it means their insights, their frameworks, they increasingly set the time for global central bank policy. When the BIS researches something like digital currencies, their findings carry immense weight. They often become the blueprint, really, for how national central banks approach these things. They're shaping the future from the inside out, you could say.
Okay, with that foundation laid, here's where, for me at least, it gets really interesting. The sources point to this profound transformation happening, driven by digital tech. It sounds like money is rapidly becoming less about, physical cash in your wallet and more about just data, information. How does that change what money is?
Oh, it's a complete paradigm shift. Payment infrastructures are getting incredibly powerful very quickly, and finance itself is increasingly being platformized by these big data-driven companies. Think about it. Money isn't just a medium of exchange anymore. It's seen as a communication medium. It's constantly transmitting information, revealing relationships, our connections, Every transaction, every digital tap contributes to what the sources call a transactional community, a really detailed, data-rich picture of our financial lives.
And we're seeing this play out dramatically, almost under the radar, but with huge numbers with the growth of stablecoins.
Precisely. Stablecoins have just ballooned. It's a U.S. $250 billion market now. In 2024 alone, they processed nearly U.S. $28 trillion in transactions.
Wow, 28 trillion.
Yeah, it's a staggering figure. It actually surpasses Visa and MasterCard combined. And crucially, it facilitates instant round-the-clock payments without relying on the traditional banking networks like SWIFT. This isn't just about speed, though. It's about a whole parallel financial rail emerging, one that bypasses the traditional gatekeepers, the old financial institutions, and fundamentally challenges who controls global transactions. It's a potential shift of power, towards new, often permissionless digital systems.
That's definitely a sign of a major shift. So with this new financial rail gaining so much traction, what are the key differences, the implications in how different parts of the world are approaching this? You mentioned the U.S. and China earlier.
Yeah, we're definitely seeing two very distinct models emerge globally. The U.S. has taken largely a market-led approach. You've got private stablecoins like USDC, USDT leading the way. Some analysts are even calling it digital dollarization of finance. Legislation is moving forward to formally regulate them, requiring things like reserve backing. This basically cements their role, and from a policy perspective, it extends U.S. dollar dominance into the digital age by letting private innovation happen within a regulatory box.
Right, and China, by contrast, has taken a much more top-down centralized path.
That's exactly right. China has banned private cryptocurrencies outright, and instead, they're actively promoting their own state-controlled central bank digital currency, the ECNY, as the alternative. Hong Kong is, interestingly, acting as a key testing ground. They've enacted the world's first bespoke stablecoin law, which kicks in August 2025. It imposes really strict requirements for anyone wanting to issue stablecoins there. So this dual approach, with China using Hong Kong almost like a bridge, it shows their strategy. Foster some innovation, but also promote the international use of their own currency, the renminbi. And what's crucial here is that the BIS, through its research, has been digging into all this cryptocurrencies, distributed ledgers. They're examining how monetary policy affects stablecoins, emphasizing the growing links between this whole crypto world and the traditional financial system, whether it's private coins or state-backed ones.
Okay, so we have these powerful innovations promising efficiency, maybe even greater financial inclusion. But there's a strong undercurrent in our sources about the potential downsides, particularly around privacy and control. Digital payment apps, like Venmo, for example, they create what's called a new sociability of money. They keep records of everything, transaction details, where you were. They can even infer your taste, your routines, just through social feeds and emojis. It's like your financial life becomes, well, an open book.
And this transactional memory, as the sources label it, it can absolutely be used for surveillance and control. We've seen some pretty troubling examples cited, things like police using PayPal data against activists, or mobile phone borrowers in Kenya getting trapped in these awful debt cycles because of the constant stream of data their phones generate about them. Even advanced Web3 technologies are apparently being tested on vulnerable refugee populations. They're basically forced to generate financial data they have little control over, often because they just don't have any other options.
That idea of controlling access reminds me of something called Operation Choke Point that came up a few years back, where cutting off access to payment systems was shown to be devastating.
It does resonate, yeah. Operation Choke Point was that U.S. initiative where authorities kind of informally pressured banks to stop servicing certain industries they considered high risk. It really showed how vital access to finance is just to participate in society, in this transactional community. And today, the sources argue that this risk work, deciding who's too risky, has shifted. It's moved away from traditional banks and marketplaces to the often opaque terms of service agreements of big tech platforms. This means tech companies can, sometimes arbitrarily, ban transactions they deem too risky, often using machine learning. And that leads to mistakes, like banning a Cuban sandwich because of the word Cuban, or flagging a bomb emoji. And the recourse for users who get caught up in this, often Byzantine and ineffective, as one source put it.
So essentially, the power to decide who gets to transact, who participates, has largely shifted from regulated financial institutions, maybe with some oversight, to the algorithms of tech companies. That feels like a fundamental shift in control. What about the affordances of cash that our sources mention? What are we actually losing as we move away from physical money?
That's a really critical point. Cash offers this unique set of qualities, these affordances. It's anti-surveillant. Your transaction is private. It's self-clearing, immediate, reliable, all without needing some third-party company to verify it. Digital systems, for all their incredible efficiency, while they strip away those very qualities, they leave a permanent, traceable record, a record that can be collected, analyzed, potentially even used against you. The convenience definitely comes at the cost of a certain kind of freedom and privacy we might take for granted.
Okay, so against this backdrop of both immense promise and pretty significant peril, how are these global bodies and nations actually building the underlying architecture for this digital future? What are the practical steps being taken on the ground?
Well, the sources indicate a really significant focus on developing what they call public goods in the technology space. The BIS Innovation Hub, for instance, is working on some potentially groundbreaking projects. There's Project Rialto, which aims for automatic foreign exchange settlement, making cross-border payments faster and cheaper. Project Mandala is developing a privacy-preserving way to do compliance checks, for anti-money laundering and counterterrorism financing. And then there's Project Agora. This one's big. Launched in April 2024, it involves 7 major central banks, including those representing the top 5 international reserve currencies and over 40 private financial firms. Its goal is huge, exploring how tokenization, putting assets on a blockchain essentially, could revolutionize correspondent banking and cross-border payments. Alongside that, you have the Basel Committee on Banking Supervision implementing global standards for how banks should handle crypto asset exposures. Those are set to kick in by January 1st, 2026. So clear rules are being established for this rapidly evolving space.
It really sounds like a coordinated global effort to build the financial highways of tomorrow. And the G20, the group of major economies, they've also weighed in significantly on this digital transformation, haven't they? What's their vision? And how do countries like India and Pakistan fit in with these digital public infrastructures you mentioned?
Yeah, the G20 Rio de Janeiro Leaders Declaration from November 2024, it specifically talks about harnessing digital tech to reduce inequalities. They recognize this concept of digital public infrastructure, or DPI, as key for an equitable transformation. But crucially, they also stress the importance of protecting privacy, personal data, human rights, and fundamental freedoms in this whole process. They're calling for transparency and responsibility from digital platforms about their data, their algorithms, content moderation, while still promoting cross-border data flows, but importantly, with trust. India is a prime example of this DPI model. They've developed comprehensive digital financial infrastructures like India Stack. That includes their Aadhaar biometric ID, the Unified Payments Interface, or UPI. UPI processed an astounding 8.6 billion transactions monthly, worth about $170 billion back in February 2024. This model is seen as strengthening state authority, sure, but it's also viewed as a development blueprint for other countries.
And Pakistan's NADRA database, you mentioned that too, biometric data, national ID numbers linked to phones covering 98% of adults. It facilitates those know your customer or KYC checks, which helps for financial inclusion. It certainly highlights the sheer reach and potential of these systems. But beyond the plumbing, the digital infrastructure, the G20 also flagged the transformative but maybe destabilizing impact of artificial intelligence in finance. This feels like adding another really complex layer onto everything else.
It absolutely is. The G20 recognizes AI's massive potential, but they also highlight significant concerns about the risks. Things like strategy convergence, where everyone's AI starts doing the same thing, reducing diversity, heightened interconnectedness, increased correlations between assets, and something called pro-cyclicality. To put that simply, it means AI could actually amplify existing economic trends, making booms bigger, yes, but also making busts deeper and faster. It's like putting the global economy on a much faster, more volatile roller coaster. As the economist Hyman Minsky famously suggested, stability is destabilizing, especially in highly digitalized finance. AI's capacity to amplify these economic cycles means that periods of calm could actually be sowing the seeds for much larger, faster downturns because risks become hidden and interconnected. It's a really critical warning.
So with all these huge financial and digital shifts happening, it seems clear they're not occurring in isolation. Our sources strongly indicate they're deeply intertwined with a broader push to fundamentally reform how the world itself is governed. What does this all mean for those larger global power structures?
Well, if you connect the dots to the bigger picture, the G20 leaders themselves, in that Rio Declaration, explicitly made reform of global governance institutions a key priority. This isn't just about tweaking financial systems anymore. It includes strengthening the UN General Assembly, reforming the Security Council to actually reflect 21st century realities. They specifically call for more representation from regions like Africa, the Asia-Pacific, Latin America. There's an acknowledgement that the current setup might not be fit for purpose to handle these complex global challenges.
That's a Pretty significant commitment, enhancing the representation and voice of developing countries in decision-making, not just in politics, but within the big multilateral development banks and other international economic and financial institutions. And the sources specifically mention welcoming that new 25th chair at the IMF Executive Board to boost sub-Saharan Africa's voice. Plus, they're looking for ways by June 2025 to realign the quota shares of the IMF to better reflect, countries' actual weight in the world economy today.
It really shows a recognition of how global economic power has shifted and continues to shift. It seems clear that whoever controls the digital financial infrastructure of the future will wield immense influence. And that understanding appears to be driving this parallel push to reshape the very structures of global governance. Because, the rules for this new digital economy probably can't be set effectively by the old power balances. Furthermore, the G20 emphasizes things like cross-border data flows, data-free flow with trust, they call it, while still respecting laws. And they advocate for responsible, human-centric AI development, calling for international cooperation, capacity building for developing countries, acknowledging the digital divides that exist. These aren't just technical discussions. They're really about equity, about control, and about trying to ensure the benefits of this digital age are shared broadly, rather than just further concentrating power in a few hands.
It's undeniable, really. We are witnessing a fundamental re-architecture of our global financial systems.
Yeah.
It's being driven by digital innovation, yes, but also by the coordinated efforts of these powerful, sometimes unelected international bodies, from the quiet but incredibly impactful work of the BIS coordinating central banks to the absolutely explosive growth of stablecoins and the steady rise of national digital currencies. The pieces of a whole new financial infrastructure are rapidly falling into place all around us.
And what's so fascinating, I think, is this palpable tension. You have the stated goals, efficiency, financial inclusion, reducing poverty, all good things. But then you have the inherent risks, increased surveillance, more concentrated power, maybe even homogenized risk across the system because everyone's using similar tech or standards. These developments, at the end of the day, they aren't just about money. They're about information, they're about control, and ultimately they're about who holds the reins in this increasingly interconnected digital world.
So as we watch these powerful global financial coalitions push for new standards, new levels of digital integration, what does it truly mean for the future of individual autonomy, for national sovereignty? Especially in this rapidly unfolding digital financial landscape. That's certainly something to keep thinking about.
Thanks for tuning in to the Last Transmission podcast. The systems are merging, the lines are fading, and the Beast Kingdom is being built. One regulation, one alliance, one digital ledger at a time. Stay vigilant, stay grounded, and never forget, the King of Kings is returning. Until next time, remain unshaken.